Well, good morning. Happy Monday. It's May 20th. Want to bring you the latest data here in the Austin metro area. We're going to start with a look at some trends. I'm going to talk about current interest rates, inventory levels, kind of what we're seeing in the market right now, but stick around. We have some breaking news from last week in terms of new rules that the city of Austin has passed, which will impact the types of developments that we can do inside the city limits to create more density and hopefully help maybe with some affordability in the market. But I want to start right here with the historic sales price trend. This goes all the way back to January 2014 and goes through now, January 2024. Call it a 10-year chart. Well, it's April to April. So if we go all the way back, you can see how kind of steady appreciation Austin was having all the way up until the pandemic. This year's 2020, here's 2021, 2022, 2023, and 2024. So I want to show you what appreciation looks like, and I want to show you what depreciation looks like. Don't look at the top peaks of the chart. Look at the bottom blips of the chart, which typically is the winter. So if you really want to look at what appreciation looks like, you start the year, you climb in the spring, you drop a little in the fall, but not as much as it went up in the spring, and you end the year in that bottom peak higher than the one before. That's what appreciation looks like. So instead of drawing a line across the top peaks, draw a line underneath the bottom peaks. That's appreciation. You have the year kind of bounces up. And that's what it looks like. And then, of course, in COVID, we never even dropped off because housing inventory went to the bottom. So that year, we 100% went up. Then the spring of 2021, we had the biggest price jump we've ever had, over $100,000 in 4 months on the median home value. In fact, it went up even more than that. You had a little reprieve at the end of that summer. People were just exhausted. But then, of course, we ran out of homes and it started going up again even before we got to Christmas. Then you had another spike in 2022. But really, all that was the end of this pandemic crazy. And you can I call it the pig and the python, right? You had a little bit of overinflation in here. But if I look at the long-term trend, okay, we're a little closer to it. We're still a little high. But long-term trend, we're probably, maybe 75,000 above long-term trends. And I don't think it's going to go all the way back to that because inflation's a real thing. The prices did go up faster than typically normal. But what we're seeing is slowly as the rates have gone up, these little bumps that we've had before are going to come back to normal. They're going to shrink. And we're going to see them come back, and this might take a year or two. But if we look at the bottom nodes, this is looking at 2021 to 2022 to 2023. We'll see where 2024 ends up. We've had depreciation. Prices have softened in Austin over the last 24 months. I think we're starting to kind of level off because rates also have done the same. So we're going to see how that plays out. But right now, that gives you a good look at kind of long-term trends. We are still way up from 10 years ago. In fact, we're more than double where we were 10 years ago. You've still had great appreciation, but the people who bought in this little window right here are the ones feeling it the most because it's hard to create appreciation in such a short amount of time, especially when there was so much inflation in the market. All right, let's talk about mortgage rates. We've had some good news over the past couple of weeks, and especially, well, I should say bad news is good news, but the CPI was a little soft last week, and that helped bring down the bond rates. Which also leads to mortgage rates coming down. So we're just over 7%. I want to show you what it looks like in a chart. So, of course, I've talked about this almost every week, but here was the beginning of April. We were at 6.99%. And then, of course, they shot up to 7.5%. They stayed at 7.5% for most of April, and it just took a lot of that buyer energy out of the market. At the same time, inventory was building up. So you have more homes for sale, fewer buyers looking at them, and it just slows the market down. But since the end of April, you can see we've had a really steady ride down. We hit 6.99% again last Wednesday. When that CPI number came down, it's bounced up again about 1/10 of a point. But what we're really watching is this 7 number. All right. If we can get back to this, where we were kind of riding up and down 7%, that means a good qualified buyer is probably getting a high 6% rate. And that created some energy in the market. That got buyers moving, and especially if they can get some incentives or discounts, with their lender, they can bring that rate down even more. It's when it goes way over 7 that really slows the market down. So we're right on that razor's edge right now with that 7% number. Keep an eye on that. This is numbers looking through April. And you can see when the rates went up, typically we want this red line to go up until it peaks in, let's say, June, and then it comes back down. That's your bell curve every year, but it already started to taper off. And that's not totally abnormal because we get a lot of inventory hitting the market. But, you know, is it going to get one more bounce before we get through June? Those are the contracts being written right now. So this is closed units year to date. The May buyers are going to close in June. And so we're going to see where that dot ends up in a couple months when we get this data out after June. But I want to see if we're going to get one more little bump before we get to the end of the year. If I come down to, this is through April data. So total sales were up about 4% in the metro area. Average sales price is up 1.1%, not terrible. Days on market's higher because we have more inventory, and median sales price is down about 1%. So really, we're right priced as well as we were last year. Historical active and pending data, we're sitting about 13,300 total residential sales, but pendings were at like 2,900. So we're at the lowest number in pendings we've had and the highest number of listings we've had. So again, if you're a buyer right now, in the last 14 years, you haven't had a better buying opportunity in terms of inventory to sales. In other words, sales is your competition. So from a buyer point of view, I can't talk about the deal you're going to get. That's up to us to negotiate that. But in terms of having the most inventory and the fewest amount of competition, this is your window right here. I'm going to look over at this chart real quick. This is our current inventory. This is active versus sold listings. So again, this was last year. We peaked out around 11.5. We're currently sitting at 12.1, almost 12.2 in terms of 1,202. That's single family homes, not everything, but single family homes. We're already at the highest level we've had in a while. It's probably going to continue to go up as we get through the summer. But what's happening, again, I showed you on that chart, is the number of sales is leveling off because of those rates. So I'm hoping rates have started to come back down. Let's see if that brings some more buyers back to the table. Want to show this chart to you real quick. So everybody talks about population. Are people still moving here? Are they not moving here? Yes, they are. And so this is July 22nd and July 2023. So think of that window of time. Okay, so this is even through last summer. The rates had already gone up. So this is after rates have gone up. People are still moving. Where are they moving? Here's the Texas Triangle: Dallas, Austin, San Antonio, Houston. What you're seeing, though, is those little light dots in the middle are the core counties, like city of Austin, city of San Antonio. They're already built out, and so they can't grow too much more. They're already kind of built out, and that's why Austin is having to pass some new rules to create more development. But the suburbs are dark, dark green. Everybody's moving out to the suburbs. Austin is surrounded by dark green. San Antonio to the north is surrounded. Houston, Dallas. So they're all moving here. Look at Florida. Almost every county is some color of green except for Naples. Florida's booming. The Atlantic coast is booming. Tennessee, Georgia, those areas are booming. The Mountain West. So you can see where people are moving from. They're moving off the farms in the central. They're moving off the expensive East Coast and out of the Northeast, and they're coming south to Texas to the Mountain West. So that population growth, it's still happening. All right, I want to come back over here. I'm going to finish with the breaking news. So this is, the city of Austin has been really changing their tune in terms of development. It's always been a city that had lots of layers of red tape, all these neighborhood groups. They were always trying to, not have something in their neighborhood they didn't want. But of course, Austin, as I just mentioned, is now losing people to the suburbs and having difficulty getting the home values down in the city. So the first phase of this home initiative was to rezone all the single family lots into being able to build 3 properties on one lot. And so that got passed and permits started being taken in February. I haven't seen any of those projects kind of get developed to the finish line yet. So we're keeping an eye on that. But the second phase, which is just as important, is you also have what's called a minimum lot size. The minimum lot size says currently that you have to have a minimum of 5,700 and change square feet to build a single family house. So in other words, if you only have a 5,000 square foot lot or a 2,500 square foot lot, you can't build a house on it. But really what it did is it stopped developers from buying, let's say, a 10,000 square foot lot from an older home in the city, taking that house down and then cutting that into like 4 lots, for example, and building 4 homes. And so what just got passed last week is phase 2. It did pass. And so here's what phase 2 is going to allow people to do. Home builders will now be able to build on lots as small as 1,800 square feet, drastically down from the previous minimum lot size of 5,750. If you are an interior lot, which means you have homes or properties on both sides, you're not on a corner lot, you can now have a minimum lot width of 30 square feet, not 40 or 50. So now the width of your lot can be thinner. And if you're on a corner lot, it can be as little as 20 square feet. That is a really thin lot. But I think what they're trying to figure out is how can they puzzle piece more properties into the city. And so now just imagine you buy a 10,000 square foot lot in the city. Now you theoretically could cut that up into 4 lots and build 4 homes, or you could build maybe even 5 lots because you can get down to 1,800 square feet, 5 2,000 square foot lots. There's going to be challenges still with deed restrictions, trees, driveways, electricity. You still have all those challenges, but now it's really changing the game on how many properties can get built in the city, how small can the lots be. I think you're going to see these projects mostly pop up in areas where we already have kind of core density, no HOAs. It's going to be those older neighborhoods in the city. So keep an eye on that. Well, if you are a buyer right now, rates are starting to come down. There's lots of incentives out there. If you're buying new builds, we have sellers that are offering incentives as well on resale properties. So I would say, man, if you want a time to go out and find a lot of properties to look at, this is the time to go do so and take a look at that. Obviously, rates is going to be the one issue. Talk to your lenders. If you're a seller right now, obviously we have more inventory. I think that's our biggest challenge. I think rates are starting to get a little better. We'll keep an eye on that. And of course, this is typically May and June, theoretically, when we're going to have the most buyers out in the year buying homes because they want a house for the summer. So I still am fairly optimistic. We're going to have a decent spring in terms of price, in terms of movement, but months of inventory is going up. So we got to get really laser focused on price, condition of the property, and if we need to, incentives for those buyers. Anyways, I hope these videos are helpful. Make sure to check out our YouTube channel at Ryan Kelly Group. Click that subscribe button. I will be uploading these videos each and every week. And of course, if you know someone looking to buy, sell, or invest in Austin, now's the time. We'd love the opportunity to chat with them. Hey, it is the last week of school for my kiddos, and then summer begins. So I hope you guys have a great week and talk to you next Monday. Thanks.